We know that there's a lot of fear in the market right now because of the recent crash. But there's finally some really good news that indicates that we could see a spike after Friday. Let's talk about it. Hello guys and welcome back to Crypto Fire, where we talk about Dogecoin, cryptocurrency, and investing. Before we go any further, please keep in mind that we're giving away $100 to a random subscriber. All you have to do is like the video, subscribe, and leave a comment on your favorite cryptocurrency. Read our description for more info about it. Now, let's get started with today's video. So, let's take a look at this. The Fear and Greed Index is at 14 right now, and yesterday it was at 10. This indicates that there is extreme fear in the market, but some of that has already started to dissipate. I think it also meant that it had reached the bottom at 10, and it is only going to rise from here. But that's not the most important update right now. There's another one that proves that we've hit the bottom. Take a look at this. This article talks about how the Q2 options will expire in June end, and that we could see a spike after that. Let's try to understand this. So, this Friday, the futures contracts are going to close for Bitcoin. We're talking about $2.5 billion worth of Bitcoin options. And we aren't just talking about end-of-the-month options expiry. It is also the end of the quarter, so this is a major event. The head of research at Stacks Fund said that intensifying the uncertainty is $2.3 billion end-of-quarter Bitcoin options, which is set to expire this Friday. This is partially attributing to the added volatility in the markets. Putting all the factors at hand together, we believe Bitcoin is very close to the bottom, at least in this current wave. According to the data, Bitcoin bears dominate Friday's 2.5 billion options expiry. I anticipate the bearish figure will remain below 34,000. With so many people betting against the market remaining down, I don't think we'll see a rise over 34,000 before the end of the week. In addition, I anticipate we will witness severe volatility on Friday. We may also stay near the $30,000 range before these options expire. However, after they expire, we could see a big pullback back to the upside. And this will undoubtedly be something to keep an eye on. What's even more intriguing is that significant funds for investors in the Grayscale Bitcoin Trust will be released in the first week of July. Many analysts feel that this is adding to Bitcoin's selling pressure. So after we're done with that, we should be able to relieve a lot of the selling pressure. Now, let's talk about Dogecoin price for a minute. So after the dip, we saw a nice rebound today. The price currently stands at around 23 cents and is up by 20% on the 24-hour chart. Yesterday, Dogecoin gained strong downside momentum. It looked like many retail investors sold their holdings after Dogecoin declined below 25 cents. But then it found support at 16.5 cents and has been trying to remain above 20 cents after the huge sell-off. And today, it is rebounding along with other cryptocurrencies. Even though this rebound is not as strong as we want, it's still pretty good when you compare it to Ethereum. So I'm pretty optimistic about it. Now, coming back to the Fear and Greed Index, we know there is a lot of panic in the market, which is pushing out the retail investors. This fear is instilled by large institutions and other major players who have a huge following. Let's take a look at this. Rich Dad Poor Dad's Robert Kiyosaki warns of biggest crash in world history. He goes on to say that the biggest bubble in world history is getting bigger. Biggest crash in world history coming. Buying more gold and silver. Waiting for Bitcoin to drop to 24K. And then there's Michael Burry, who's also known as the Big Short investor. He said that all hype and speculation is drawing in retail before the mother of all crashes. When crypto falls from trillions or meme stocks fall from tens of billions, Main Street losses will approach the size of countries. History ain't changed. And this is just pushing out the retail investors. Take a look at this. A longtime crypto bull argues that the Bitcoin drop is merely cleaning out the investors with paper hands. If you don't know, paper hands is a term used in the crypto world to describe those who sell their holdings when markets are volatile. She said that we had 200 days of market expansion. You can't have a number go up forever. That doesn't happen in any market. What we're seeing is a correction, a contraction, and a lot of what is getting shaken out is what we call the paper hands. There's a lot of retail investors that didn't do their research, and are now selling. But there are not a lot of long-term holders selling. So, I think you get the idea. Retail investors are afraid, but they don't realize that this might just be the best time to accumulate. I talked about Michael Saylor yesterday and how he bought another $400 million worth of Bitcoin after the dip. But now, we should also take a look at the Dogecoin millionaire who still hasn't sold any of his holdings. He said that he invested over $250,000 in Dogecoin in February, and on April 15 he became a millionaire. But on Tuesday his holdings were back to $831,000. And even then, he didn't sell. Now what's crucial is that he said he isn't worried because Ethereum and Bitcoin are hit as well just as badly as Dogecoin. And as I said, Dogecoin is already on its way up, unlike Ethereum. So basically the entire market is shaking up right now, and it's not just Dogecoin. And we have to remember that. Now let's talk about the biggest reason behind this panic in the market. We know that China is doubling down on its efforts to stop crypto mining. And people are worried that it's a really negative sign because 65% of all the crypto mining in the world is done in China. But I believe that this might be a blessing in disguise. Take a look at this. Anthony Scaramucci said that China's Bitcoin ban is short-term negative but long-term positive. And that seems to be what we're hearing from a lot of analysts. There's David Marcus, the head of Facebook Financial, who said that. How is more Bitcoin mining power moving to the United States and the West a bad thing? In my opinion, China cracking down on mining is a great development for BTC. Basically, he's talking about how the majority of Bitcoin mining is not going to be concentrated in China, and that's a good thing. We don't want a country to have that much power over crypto mining. So, as it is beginning to scatter, cryptos are moving to a much safer space. Also, I think we should listen to him because he is the co-creator and board member of the crypto that Facebook is going to come out with. So I think it's a pretty big deal. Now, let's talk about the big institutions for a minute. In the previous video, I talked about how the major institutions are trying to instill fear in the market and they actually aren't scared. But I think there's more to it than that. Take a look at this. This proves that some of that fear is real for institutional investors as well. It says that 1/3 of mainstream investment firms said that Bitcoin is rat poison. So, this is according to a survey that was recently conducted by JP Morgan, which was answered by 3,000 investors and around 1,500 institutions. Now, what is interesting is that their views align with those of Warren Buffett, who called Bitcoin rat poison squared. Now, I'm still optimistic about this because Warren Buffett's recent actions indicated that he's starting to get bullish on crypto. Look at this. He recently invested in a Bitcoin-friendly digital bank. I'm pointing this out because it seems that Warren Buffett's views on crypto have a huge impact on these major institutions and investors. So now that he's starting to get a bit bullish, I believe we could see their views change as well. And when that happens, we could see a lot of funds coming into crypto. Also, we have to keep in mind that a lot of institutions are already really bullish. Take a look at this. Goldman Sachs exchanged a tokenized version of a U.S. Treasury bond for JP Morgan stablecoin. It was officially confirmed by the global head of digital assets at Goldman Sachs. He said that, "We see this as a pivotal moment for the digitization of transactional activity." So these signs are looking quite bullish right now, and I'm a bit optimistic about where Dogecoin is headed, especially after the spike that we saw today. We can definitely see Dogecoin fall to the 15 cents level before Friday, but I think that the options expiry this week is going to change a lot of things. And with that, we've come to the end of this video. Thanks for watching till the end. If you enjoyed it, please consider liking and sharing it with your friends. Also, please subscribe to the channel and turn on post notifications for daily videos on Dogecoin and cryptocurrency. If you have any questions or suggestions, please leave them in the comments section below. Goodbye. Take care.